Hello everyone, welcome to our new channel Rising Star Options. In this platform we will discuss on various components of stock market. Today we will start with the very basic of candlestick pattern. So as you can see here, in this candle the complete red part or complete green part is known as the body of the candle, and the upper shadow and lower shadow are known as a wick of the candle. So this is the upper wick of the candle, this is the lower wick of the candle. Let's take an example. So I have opened a State Bank of India chart and let's discuss on this candle, and I would like to draw your attention at this point. So here O for open, H for high, L for low, C for close. And if I hover my mouse over this candle, you will see that the open, high, low, close are showing at that point. So it means this candle is having a very small upper wick or upper shadow, and there is no lower wick. That means the candle has started at this level. This is the open 525. It has made a high till this level, which is 548, and it has closed at this level, which is 542.95. Okay, so let's discuss with our first candlestick pattern, and that is hammer. As the name suggests, that the candle looks like a hammer candle. It means the wick of the candle should be higher than the body of the candle. The body should be very less and the wick should be much higher than the length of the body. So this kind of candle we will see at the support level of any chart pattern. Here you can see at the below that this is a downtrend chart, and at this point we can find out a bullish hammer, and it may denote the trend reversal at this point of view. Next is the piercing candlestick pattern. So first one, you can see this is a bearish candle, this is a red candle, and then if the next candle pierces or takes out 50% of its previous candle, then we'll see as this candlestick pattern as a piercing candlestick pattern. So this particular candlestick, the bearish candlestick, 50% of its body is taken out by the following candle by this green candle. This is a bullish chart pattern, and this is one of the example of that. The third one is the bullish engulfing. The first candle is the bearish candle, and you can see the very next candle has engulfed the complete body of its previous candle. This is a very bullishness sign in the chart when we'll see it. Like in this chart pattern, this is a downtrend at this point of time. This green candle has completely taken out its previous candle, so this candle will be known as a bullish engulfing. Next one is the morning star pattern, and what is the combination of this candle? It's basically a 3 candle combinations. The first candle should be a bearish candle. Second candle is a doji candle. This candle we'll discuss later in this slide. Okay, so first candle is a bearish candle, second candle should be the doji candle, and third candle should be at least taking out the 50% of the first candle. Okay, so if the first candle is like this one, maybe it's a bearish candle, and next is the doji candle, and the third candle should at least take the 50% of this candle. That means it should take at least this part. Then we'll tell it as a morning star pattern. So here at this level you can see that this is a downtrend, and this 1, 2 and 3, if we combine these 3 candlesticks, we can term it as a morning star pattern, because the third candle has taken out the 50% of its first candle. So this kind of pattern we may often see at the support level of any chart pattern. Next is three fight soldiers. So this is also trend reversal chart pattern. We often get to see is the support level. As you can see, this is a complete downtrend. This is a downtrend chart, and at this level you can see that three consecutive green candle, three bullish candle are coming or showing at the resistance level or the support level. Such candlestick will be known as a three fight soldiers. They often denote that there could be a possible trend reversal at the support level. Next one is the white Marabuzu candle. So this is basically a bullish candle, and it should not have any wick in either of the side. Such candle will be known as a white Marabuzu candle. Here you can see it's a downtrend. At this point of time, there is a candle which is not having any wick in either of the side, and after that the trend has reversed, and the market has been reversed from the downtrend to the uptrend. Okay, next candlestick pattern is the bullish harami. So in Japanese, harami means pregnant lady. That means a lady, and if she carries her child inside her body, is called harami. Here you can see this bearish candle, and this candlestick is carrying its child candle inside her body. That's why we'll call this child candle as a harami candle. And since the candle is a green candle, we'll call it as a bullish harami. So in technical term, some may call it as an inside candle and some may call as a harami candle. So both are same. You may find it in any the chart pattern. We go to the next one. Tweezer is also a trend reversal candlestick pattern. We may often get to see them either in the resistance level or in the support level. Here you can see this is the downtrend chart. At this point of view, we can see two similar candles. The condition of the tweezer is two consecutive candles should look alike. Since you can see that the first one is the bearish candle with a downside wick, and immediate next candle is a green candle with a downside wick. The color both are different, but they look similar. The structure of the candle are similar. Such candle, if we found them either in the support level or in the resistance level, we will call it as a tweezer. Next one is the inverted hammer. The first one which we discussed in this video was the hammer, and this is the opposite of that candlestick pattern. So it's an inverted hammer. In hammer candle, the wick was in the lower side, and in the inverted hammer, the wick is in the upper side of the candle. So such candlestick also will found it in the resistance level. Next one is the dark cloud cover. It's a candlestick pattern that shows a shift in momentum to the downside following a price rise. Here you can see this is the uptrend. Start with this and it keeps the momentum up. At this point of time, you will see there is a three consecutive red candle after this price momentum, and the trend has reversed from uptrend to downtrend. Next is bearish engulfing. Like bullish engulfing, another candlestick pattern is the bearish engulfing pattern. That means the bearish candle should engulf the complete body of its previous bullish candle. So this is one of the most powerful candlestick pattern that we may often get to see in the chart. Like morning star, we are having one more chart pattern, that is evening star. So morning star we consider at this support level of any chart pattern, and evening star we'll consider at this resistance level of the chart pattern. We'll discuss of all these price actions, uptrend, downtrend, Dow theory, support and resistance in a different video, but just to be familiar with the candlestick pattern, we are just going to have a little more discussion on this kind of a chart that we are showing in that display. So here you can see that this is the chart that start with an uptrend. Here is a bit momentum, and at this point of time these three consecutive candlestick pattern have made a evening star form. So first candle is the bullish candle, second is the doji, and third one has taken out at least the 50% of the first candle. So such candlestick pattern, if we find them at the resistance level, we'll call it as a evening star pattern. And generally morning star pattern we find it in the support level, evening star we find it in the resistance level, and both are considered as a trend reversal pattern. Next one is three black rows. Three black rows is one of the sign of the trend reversal, that you can see the trend was in the uptrend, and at this point of time three consecutive candle color in red they came, and the trend has reversed from uptrend to downtrend. So such candlestick pattern, if we find in a big rally in a chart pattern, then we may feel that there could be a trend reversal if such candlestick we find in the resistance level. Next one is the black Marabuzu candle. Like bullish Marabuzu, we are having a bearish Marabuzu that we can also call as a black Marabuzu candle. That basically the black Marabuzu should not have any wicks either of the side. It should have the complete body, and this is also called as a trend reversal if we find them in the resistance level. Like bullish Harami, we are having the combination of the bearish Harami also. That means the bullish candle is carrying its child candle, that is the bearish one, inside her body. That's why this one is called a Harami candle. Since the color is red, it's a bearish Harami candle. Like tweezer bottom, we are having tweezer top also. Tweezer bottom we can find at the support level, tweezer top we may find in the resistance level. Tweezer bottom, tweezer top both are considered as a trend reversal chart pattern. Now we can discuss with the doji, as we found them already in the morning and evening star. The in between the first and third candlestick we found their doji candle. So what is the meaning of doji? This is basically an indecisive candle. You can see the body is too small, and both sides of the candle should be having a big wicks. That means here buyers and sellers both are confused where the market should be taken now. Such candlestick pattern are called indecisive doji candle. So falling three method, this is one more chart pattern that we may often get to see in any of the stock or price actions. So this is categorized or by two long candlesticks in the directions of the trend, one at the beginning and one at the end. So first candle is the bearish candle. The three consecutive green candle will come near to the resistance level of the red candle, and after that one more red candle will come which will be taking out the very first candle. Here you can see that this is the first bearish candle, three consecutive green candle, and which will be coming near to the resistance level of the first red candle, and after that one more bearish candle that should be taking out the low of the first candle. Such method we will call as a falling three method. Like falling three method, we are having rising three method, and like you can see, this first candle it's a green candle, and 3 consecutive red candle after that, which will come near to the support level of the green candle, and after that one more green candle that should be taking out the high of the first candle. This is a rising window. This is a bullish continuation pattern. As you can already see that it appears as a pause once there is a price move to the upside and shows rejection from the lower prices, and we often get to see a gap in between this rising window. This is the first candle, this is the second candle, and in between these two candles there is a slightly gap in between 2 wicks, in between the lower wick and the upper wick. These are called rising window. Like rising window, you are having the falling window in the bearish momentum, when we'll get to see 2 consecutive bearish candle, and in between them there is a slightly gap between the lower and the upper wicks. This also forms a gap. So thank you everyone, and if you like our video, if you have any questions, you can comment in the below and you can share with your friends. Thank you.